Thank you very much for joining us once again. Welcome back. Today we are discussing operating cycle of a business. The operating cycle of a business can be classified into two categories based upon the sectors. We can classify the sectors as trading sectors and manufacturing sector. In the trading sector, there are three phases of operating cycle. Cash will be converted into inventory. Inventory will be converted into receivables and receivable will be converted back into the cash. In the same way, in the manufacturing sector, we can say there are five phases of the operating cycle. Cash will be converted into raw material will be converted into work in process will be converted into finished goods will be converted into receivables, and receivable will be converted into cash. We can show the same thing in the diagram as well. Here is a cash. From the cash, trader will buy the finished goods, trader will sell the finished goods, trader will collect the money from the customer. In the same way, manufacturer has a cash, manufacturer will buy the material, manufacturer will put the material into the work in process will go into the finished goods will go into the debtors, and debtors will be converted into the cash. This is called operating cycle of the business. Let's discuss it in more detail. Mr. A has issued a PO in the name of the supplier. Against this PO, supplier will deliver a raw material to Mr. A. Mr. A will put this raw material into the work in process. This work in process will be converted into the finished goods. Finished goods will be sold to the customers, and this receivable will be converted to the cash in hand. And we have discussed this is operating cycle. So the time when Mr. A will place an order, will issue a PO, and the Mr. A will receive the material from the supplier, it depends upon the average lead time. And after receiving this raw material, when this raw material will be put into the work in process, we can say this is raw material holding time. How much time work in process will take to be converted into the finished goods? We can say this is work in process conversion time. The time that it will take that finished goods will be sold to the customer, this is called, I can say this is my finished goods holding time. After the sales, there will be definitely time period that customer will pay the money to Mr. A, means this will not be a cash sales, it will be a credit sales, and customer will pay after some time. So it will called average debtor collection time. So some time is involved here, some time is involved here, some time is involved here, some here, and some here. The time this raw material will be put into the work in process and it will be converted into the finished goods, this is called my inventory conversion cycle. When the supplier will deliver the material to Mr. A, supplier will issue the invoice as well. After getting the invoice, Mr. A will pay cash to the supplier. Thus, this is the time that Mr. A will pay cash to the supplier, and Mr. A will get money from the customer at this point. So the time in between this cash is out and the time when this cash is in, the difference, the timing difference in these 2 points, this is called my cash conversion cycle. So Mr. A has received the material here and Mr. A has received the cash at this point, and the time in between these 2 points is called the operating cycle of the business. So now I can define what is my operating cycle. I can say, so the difference when the material is received and cash is received back from the customer, this time lag in between these 2 points is called my operating cycle. So what is my cash conversion cycle? I can say when the cash is out and when the cash is in, the difference in between these 2 points is called my cash operating cycle. So if I am doing analysis of operating cycle, I can say my operating cycle contains these debtor days, finished goods holding period, work in process conversion time, raw material holding period. So this is called my operating cycle. If I am taking cash conversion cycle, I can say it will be average debtor days plus finished goods holding time plus work in process conversion time plus raw material holding time less this time the raw material has been received and the cash has been paid to the supplier, which is called average debtor days, which is called average creditor days. So if I am deducting average creditor days out of the sum of all this, it will give me cash conversion cycle. And the importance of the operating cycle is the quicker is the operating cycle, the less amount of investment is required in the working capital and improve the profitability of the business as well, and vice versa. So I can convert the same discussion into the formula straightforward. I can say in the manufacturing business, my cash conversion cycle will be debtor days, finished goods holding period, work in process conversion time, raw material holding period less supplier credit time. We have just discussed it will be equal to my cash conversion cycle. While in the trading business, there will not be any work in process conversion time and there will not be any raw material holding period. Rest of the components will remain as it is. Let's take this example. They say Wines and Company buys raw material from supplier that allows wines 2.5 months credit. The raw material remaining inventory for 1 month. Raw material holding period is 1 month. It takes 2 months to produce the goods, so inventory conversion time is 2 months. The goods are sold within a couple of days from the date of production and customer take an average of 1.5 months. For debtor days are 1.5. If we are applying the formula just we have discussed, cash cycle is 2 months. Let me put it on the diagram. So I can say I am starting from here. Okay. I can say this is 1, this is 2, this is 3, this is 4, this is 4.5. This is the point that we have received material. After receiving the material, it takes 1 month to put the inventory into the work in process. Then it takes 2 months to produce the goods. So inventory conversion cycle is 2 months. So 1 plus 2, 3. So from work in process to finished goods, it takes 2 months. Just after production, goods are being sold and customers are taking 1.5 months to pay. So customer will be paying at the end of 4.5 months. Here the cash will be in. Wines giving 2.5 months credit. So here material is being received, here invoice is being received as well. So 2.5 months means cash outflow will be at this point. Cash outflow, this is cash inflow. If I'm asking what is my cash operating cycle, this is cash, the time lag in between cash out and cash in, which is equal to 2 months. If I'm asking what is the operating cycle of the business, it will be starting from here when I will receive the material till this point when it will be converted back into the cash, which is 4.5 months. Thank you very much for joining us. In our coming lecture, we will discuss overcapitalization and we will discuss working capital management as well. Thank you very much for joining us.